Quarterly taxes make your stomach drop. You're not behind, you're just missing a system. In the next 11 minutes, I'm going to show you the simple, boring, unsexy setup that prevents surprise tax bills, penalty letters, and that awful "I guess I'll put it on a credit card" moment in April. This is the owner's ledger. Today we're breaking down quarterly taxes for brand new business owners in the first 2 years. Plain English, no jargon, no CPA required, just 3 numbers, 1 extra bank account, and a calendar reminder. Here's the trap that catches almost every first-year owner. Your business bank account looks healthy. You had a good month. You spend like it's all yours. Then, April 15th hits and you realize part of that money was never yours to begin with. It was the IRS's, and you've been holding it hostage without knowing it. Quarterly taxes are not a separate tax. They are not extra taxes. They are just a schedule for paying what you already owe as you earn it, instead of pretending it doesn't exist and then panicking in April. If you do this right, taxes stop being a crisis and become a weekly habit, like rent, like utilities, like anything else that leaves your account on a predictable schedule. And the moment you build the system, the fear goes away. I've watched owners cry with relief once this clicks. That's not exaggeration. That's the actual reaction. So here's what we're doing today. 4 chapters. Chapter 1, what quarterly taxes actually are and who has to pay them. Chapter 2, the 3-number good enough estimate without a CPA. Chapter 3, the bank account workflow that makes taxes automatic. Chapter 4, how to avoid penalties in your first year even if you don't have a clean prior year tax return to work from. Then I'll give you your Do This Monday action list. Let's go. Chapter 1, what quarterly taxes actually are. Quarterly estimated tax payments are prepayments toward your annual tax bill. They apply to sole proprietors filing Schedule C, single-member LLCs taxed as sole props which also file Schedule C, partners in partnerships filing K-1s, and S-Corp owners for pass-through income above whatever salary you pay yourself. If you're a W-2 employee only, your employer withholds taxes from every paycheck automatically. As a business owner, you're your own employer now, and the IRS expects you to withhold and send money in throughout the year on their schedule, not yours. The 4 due dates are April 15th for income earned January 1st through March 31st, June 15th for income earned April 1st through May 31st, September 15th for income earned June 1st through August 31st, and January 15th of the following year for income earned September 1st through December 31st. Yes, that spacing is weird. It's not truly every 3 months. Don't fight it. Just put all 4 dates on your calendar today with a reminder 2 weeks before each one. Why does the IRS care? Because the U.S. tax system is officially pay as you go. If you don't pay enough throughout the year, the IRS charges you an underpayment penalty even if you pay everything in full when you file in April. Right now, that penalty runs about 8% annualized on the shortfall, compounded quarterly. Not devastating on small numbers, but on a $15,000 tax bill, it adds up fast. The simplest way to think about quarterly taxes, you are not paying extra. You are paying earlier. Chapter 2, the 3-number good enough estimate without a CPA. You do not need perfect math to avoid panic. You need a repeatable rule you can execute in 15 minutes every Friday. Here are the 3 numbers you need to know. Number 1, your weekly owner pay, which is what you transfer out of the business to your personal life. Number 2, your weekly business savings buffer, the cash you keep sitting inside the business for slow weeks and surprise expenses. Number 3, your weekly tax set-aside, money you treat as untouchable, as if it already belongs to the IRS, because it does. The fastest good enough estimate for brand new owners is to set aside a flat percentage of profit, not revenue. If you don't know your profit yet, because your bookkeeping isn't clean yet, go watch last week's EP03 episode and set that up first. Then use revenue temporarily, but understand you'll be over-saving by a lot. Here's the starting range every new owner should memorize. 20% if you're very low income with lots of deductions, 25 to 30% for most new owners, 35% if you want extra safety, or if you're in a higher federal bracket, or if you live in California, New York, New Jersey, or Oregon, and have state income taxes too. Concrete example, because this stuff clicks better with real numbers. This month, your business brought in $12,000 in revenue. Your expenses were $7,000. Your profit is $5,000. If you set aside 30% of profit, your tax set aside for the month is $5,000 times 0.3, which equals $1,500. That $1,500 goes straight to a separate account and stays there. That's not your final tax calculation, it's your anti-panic system. If you want a slightly smarter version without becoming a tax pro, split your set-aside into two mental buckets. Federal income tax runs 15 to 25% of profit for most new owners. Self-employment tax is another 15.3% of net earnings on top of that. And self-employment tax is the one that surprises everybody because it covers Social Security and Medicare, and nobody warned you about it. Rule of thumb, if you do 30% of profit and you're a typical new owner in a typical state, you're usually in the sleep-at-night zone. Chapter 3. The bank account workflow that makes taxes automatic. This is where most owners fail. They try to mentally remember taxes. Don't. Never. Under any circumstances. Make it physical, make it automatic, make it impossible to forget. Step 1. Open a separate business savings account and name it something aggressive that stops your future self from touching it. Name it tax hold, do not touch. Name it IRS money. Name it not mine. Words matter. When you see that account name in your banking app, your brain has to consciously override it to move money out, which is exactly the friction you want. Step 2. Set one automatic weekly transfer, not monthly. Weekly beats monthly by a mile because it keeps each individual transfer small enough that you don't feel it leaving. Monthly transfers get skipped when cash feels tight. Weekly transfers just happen. Step 3. Every Friday afternoon, look at your profit for the week. If you're not tracking weekly profit yet, use the training wheels version. Take 25 to 30% of every deposit that hit the business account and transfer it immediately to tax hold before you do anything else with that money. Example, a $2,000 payment from a client clears on Wednesday. On Friday, your automation sends $600 straight to tax hold. Your business checking now shows $1,400, which is your actual, real, spendable cash. Not $2,000, $1,400. This one shift changes everything about how you operate. Your business stops feeling like it has extra money because it doesn't. Step 4. Set a calendar reminder for each of the 4 quarterly deadlines. On that date, you make a payment from tax hold to the IRS. How do you actually pay? Most owners use IRS Direct Pay at irs.gov or EFTPS, which is the free federal tax payment system. Both are free, both take about 5 minutes. If your state has income tax, your state revenue website will have a similar payment portal. You don't need to love the portals, you just need the money sitting there ready when the reminder pings. Chapter 4. Safe Harbor Rules and the First-Year Owner Plan. Let's talk about the part everyone fears, penalties. The IRS has safe harbor rules that protect you from underpayment penalties if you pay in enough during the year, even if your actual final tax bill ends up higher than expected. The most common safe harbor is to pay in at least 100% of last year's total federal tax liability, or 110% if your adjusted gross income was over $150,000 last year, through a combination of withholding and estimated payments. But brand new owners often don't have a clean last year business tax return to look at. So here's the first-year owner plan. 4 steps. Step 1, oversave. Pick 30% of profit. If you're nervous, do 35%. Sleeping through the night is worth the extra 5%. Step 2, pay something each quarter, even if it's not perfect. Small and consistent beats big and late. A $400 payment on time is dramatically better than a $2,000 payment 3 months late. Step 3. When you file your first tax return in April, reconcile. If you overpaid, you can either apply the overpayment forward to next year's estimated payments or take a refund. If you underpaid,
Pay the difference and adjust your percentage upward for the current year. Step 4. Upgrade once per year. After your first full tax return, you now have a real baseline number to work from. That's when Safe Harbor becomes easy to hit and your estimates get sharper. And one more real talk point. If your profit is growing fast, like you went from $2,000 a month to $20,000 a month, your old percentage estimates will be wrong. That's not failure, that's growth. Just increase your set-aside percentage until you catch up, and if you're really unsure, pay extra in the next quarterly. You can always get it back at filing time. Here's your Do This Monday action list. Monday morning, open a separate business savings account at the same bank as your business checking. Name it Tax Hold. Tuesday, set an automatic weekly transfer of 25 to 30% of your last week's deposits into that account. Wednesday, put all 4 quarterly deadlines on your calendar for the next 12 months with 2-week advance reminders. Thursday, create an account at IRS Direct Pay or EFTPS so you're ready when the first deadline arrives. Friday, do your normal Friday close and confirm the transfer landed. Do those 5 things this week, and you have completely solved quarterly taxes for the rest of your business life. It really is that simple. The people who panic every April are the people who never built the system. Next week on the Owner's Ledger, Cash Flow Cliff Notes. How to tell the difference between being actually broke and just having a timing problem. Because those two things look identical in the moment, but they need completely different responses. Subscribe so you don't miss it. Comment the word tax below, and I'll send you my exact weekly tax hold checklist, plus a simple profit to tax hold calculator I use with every new client. Until then, build the account, set the transfer, and I'll see you next Tuesday right here on the Owner's Ledger.